I wanted to compare them to two other major competitors. Okay, so this is Dunkin' Donuts. For reference, I live in California, so I am not surrounded by a bunch of Dunkin' Donuts. If you ask me if Dunkin' Donuts was very popular, I'd say no. If you live on the East Coast or in Florida, this is a very different, scenario for you. You probably think that it is very popular. So this is very location based. Don't just write it off because it's not near you. So, for example, I think that Dunkin' Donuts isn't that popular, but they have 10,000 locations. They're in 3,420 cities. They're huge. Starbucks, they have 16,000 locations. I think Starbucks is popular. They obviously are. They have 16,000 locations compared to Dunkin' Donuts' 10,000, and they're everywhere over the US. And you look at these, you see Dunkin' Donuts dominates the East Coast. They dominate Florida. Starbucks, they dominate pretty much everywhere, but where Dunkin' Donuts doesn't have any locations, and look at Washington and Oregon, Starbucks has a ton. That's where they started. So they're kind of taking up the market share over there. And then we go to Dutch Bros. This is a fraction of the locations, 1,181 locations, and Dutch Bros is poised for just having major growth. You see they're expanding very rapidly, but I just want to compare. I mean, they have 1,181 locations. Dutch Bros is so much cheaper, so much easier to open, so much easier to run. It's just a little hut, pretty much, in comparison to Starbucks and Dunkin' Donuts, which they have an actual inner part. They have a little cafe, but Dutch Bros people just want to get the drinks, and I'd argue they're much more popular than these others, and they have 0 locations on the East Coast, where I think if you throw a Dutch Bros next to a Dunkin' Donuts, they're gonna have a fight. Dutch Bros is gonna come up in that battle victorious. So I think we will see that happen pretty soon here as they expand. And you just look, the room for expansion is just so great for the Dutch Bros, and that's why I'm investing it, because you get into a stock like Chipotle. For example, Chipotle is one that has slowed down massively recently, and that's because they already built out what they could do. Chipotle's growth is not as attractive as it used to be because they already have all the locations. They already have everywhere that they could have done. Dutch Bros is so early in its growth stage that this is such an attractive stock because, this is one that's going to be growing for years and years to come, and I can see this getting to 10,000 locations easily. I see this happening probably pretty soon. There's a few Dutch Bros locations just by where I live in my small town in Northern California. So I don't think it's that far out of the ordinary to have, 2, 3, 4 Dutch Bros locations in a major city, even more than that, greater than 5 in just one city. So I really think that Dutch Bros is the future for coffee. And there's 2 scenarios with my investment right here. So swing trade is my first choice. I do want to just have a nice swing trade on Dutch Bros. I think that long term, they are a great investment as well. But there's 2 scenarios which I'm both happy with. I'm happy investing in this company for the long term, and I'm happy investing in this company for a swing trade. Disclaimer, I do not believe in technical analysis at all, but this company has exhibited patterns that do look very similar to one another, and we're seeing another bounce off the bottom right here. We do see this company is kind of, I'm not sure what the term for it is. Like I said, I don't believe in technical analysis, but we do see that it's actually dropping, and we see that the, peak of the stock is coming down at an angle right there. And we look at their past 3 months, this represents a different kind of chart where they're bouncing off the bottom as well. So, take it with a grain of salt, but at the end of the day, I think that this is a decent, it sets up for a decent swing trade where you're probably able to make a quick little 10%. I invested in it. I'm already up a few percentage points. And also, like I said, I'm still holding this company for the long term. I mean, look at the growth trajectory for this company. It's going to be huge. It's going to be massive. But just for right now, I think a swing trade is very nice in this company and presenting a very great opportunity. And like I say right here, the entry point for this, very nice. And I don't often do this, but I see opportunity. And this is also, this is great for diversity. This is great for a consumer stock. If you guys don't have a bunch of consumer stocks in your portfolio, like me, my portfolio is very tech heavy, very AI heavy. So having some consumer stocks definitely helps. I have my Celsius, I have my ELF, but having a little bit of Dutch Bros does help my portfolio. And this is a great, the risk to reward for this one, for this swing trade is very nice because I don't mind holding this stock long term. So if I can swing trade it, then I'd be very happy with it, make a 20%, 10% profit in just a few weeks here. But even if they drop 10%, I'm happy to dollar cost average down. So I really don't, see that big of a risk in this swing trade at all, because I think this is a great price for Dutch Bros. Forward P of 55. Obviously, people believe in the growth, but I believe in the growth as well. And I think we're going to see this company grow at this same rate for a very long time. So
the day after the markets took a huge plunge, the Dow falling more than 500 points. Now,
and we know that this just fell because of profit taking. I don't think anything actually occurred occurred.
Among the concerns, the lack of any major agreements coming out of the China summit this week. NBC's Business and Economy.
But that is something to take into account, is that, I'll stop pausing it as much, but this is a really short video. It's going to be a short reaction today because, it's the weekend, not a lot going on. But you got to think, this meeting with the Chinese president, if there's nothing that comes out of it, then, is it really worth it? There's obviously the market's going to feel backlash on that. So he has a great point right there.
Reporter Ali Canal joining us, just sparse details as far as what they actually accomplished.
Yeah, guys, good morning. Investors were hoping for some sort of a breakthrough here, maybe a trade agreement between the two countries or a sign that China could help ease some of these tensions around the Strait of Hormuz. But there were very few concrete deals to come out of this summit, and that's raising concerns that these energy shocks, that they could last longer than expected. And when Wall Street starts to worry that inflation could stick around, you see that show up very quickly in the bond market. So this is where investors buy and sell things like government and corporate debt. And that's exactly what we saw yesterday. So investors were pulling money out of bonds over fears that inflation could reaccelerate. And that,
I think we definitely see inflation reaccelerate. The Iran war, it's going to be a long time. I don't think it's close to over. I think we're going to see this go on for a pretty good amount of time.
Sent longer-term interest rates jumping. Now that matters for everyday Americans because it can make things like mortgages and credit card loans even more expensive at a time when inflation.
And if you guys know, obviously this is going to affect the consumer that much more. It just goes down the pipeline. Obviously oil and energy gets more expensive. The bigger companies and corporations feel that. It's more expensive to transport products. This gets passed down to the consumer. The consumer can't even pay to fill up their car, so now they can't pay to go out to eat. These companies are hurting. People aren't getting paid because people are getting fired. Obviously, it's just a big cycle that ultimately ends up in a recession if not taken care of, which that's a fear, considering the current state of, Jerome Powell maybe possibly leaving and things of that nature. So that is definitely a valid concern.
Is starting to ripple across the entire economy. One forecast this week from the Philly Fed shows inflation could rise at a 6% annual pace this quarter. You're seeing there that's
not good. That is not good.
More than double their previous forecast. So the big concern on Wall Street is that this isn't just a short-term spike in gas prices, but the start of a broader trend where prices across the economy stay higher for longer here, guys.
It truly is the inflation effect. Ali, thank you. Hey, thanks for...
So that's all that I have for the reaction today. But all in all, if we do see this inflation, which honestly, I hope we do, because, if you're not at the age of retirement or you're not about to sell all your stock, then you should want the stock market to kind of crash. You should want to be able to invest in stocks at a cheaper price. So that's something to take into account when it comes into investing into the stock market. This is going to present a ton of opportunities, which it already has, but it's going to present a lot more that haven't even been thought about yet. So there's a lot of opportunities that are going to arise from this. And I think we do see inflation kind of, obviously rise. And I think this will last a long time. But the current president does have a focus on making sure the stock market does go up. So I think, obviously we'll see some ups and downs, but this could present some great opportunities for the investor. So be sure to look out for that. But that's all I have for today's reaction video, guys. If you did enjoy, be sure to smash that like button. Also subscribe to the channel. I really appreciate the support. Catch you in the next video tomorrow. Peace.